Hi, I'm Amelia Thomas, the managing partner of Empire Capital Ventures, and we help first-generation millionaires generate nine figures in wealth through advanced tax planning and wealth management. What an accredited investor is someone who meets one of two definitions. That first definition being $1 million in net worth. And net worth is simply your assets minus your liabilities, not including your primary residence. Or it could be a income-based qualification. That income-based qualification is simply $200,000 in income if you're single, $300,000 in income if you're married filing jointly, and you must have had that income for the past 2 years with the expectation that you'll have it going into the third tax year. So being an accredited investor gives you the opportunity to have access to investment deals that are not available to the general public. So when you hear about opportunity and you hear about individuals investing and having certain access to different types of real estate deals and oil and gas deals and minerals and just all of these things that people hear about, it is prohibited. It is against the law for advisors to share these opportunities with individuals who are not qualified. And therefore, 98% of individuals who are actually eligible to participate in these opportunities have no idea about them because their general advisor typically doesn't have access to that information. So it is really about getting the information out there and making sure that people who are eligible know about those opportunities so they can take advantage of them. I think one of the largest myths, number one, is going to be that it's for the uber rich, right? Like you have to be a Jeff Bezos, you have to be an Elon Musk, you have to be a Donald Trump, right, to take advantage of these opportunities. And that's simply not the case. 1, 2, 3. If you remember 1, 2, 3, $1 million in net worth, $200,000 in income if you're single, $300,000 in income if you are married filing joint. That's the only qualification that you need to be able to meet. The second largest myth is just believing that you have to have a certain caliber of education to participate. With access to the internet, it is so much easier to find information these days and to do research and due diligence. You know, back in the day when people started coming up with these different investment opportunities, access to information was not as widely available. And therefore, the SEC put in measures to help protect everyday citizens from being taken advantage of. The third largest myth that I'm going to talk about is people think that you have to be able to put away, $200,000, $300,000, $400,000 in these opportunities to get started. And that's also not the case. In many cases, you can start investing as an accredited investor for $25,000 or less in some cases. And that is really a shocker to a lot of people because they instantly think like, oh, I have to put away $100,000 into my first deal. That's absolutely not the case. And so it's much more accessible than people realize. And many people who are accredited investors, they probably have, $25,000 or $30,000 sitting in a old 401k or a checking account or their SEP IRA at their job and just not realizing that I can be doing so much more with this money, but they just did not know that that was an option. Some of the biggest mistakes that I think people make when it comes to being an accredited investor is one, not properly understanding the word diversification. So diversification to me, as a wealth manager, is making sure that we have enough assets in completely separate, uncorrelated asset classes that help you make sure that you take advantage of downturns and upturns in the market. And what I mean by that is not just a portfolio of mutual funds or not just a portfolio of stocks and bonds, but literally real estate, oil and gas, your business. You may have a small portfolio of stocks. You may have some mutual funds, ETFs, options. It's a gamut of investment classes that you're working with. The second mistake that I see people making pretty often when it comes to being an accredited investor is that they are not taking advantage of the opportunities long term, because it is so foreign to people, and because you may be placing larger dollar amounts into larger deals. These are really not short-term opportunities. If you're looking for short-term opportunities, investing in deals that require you to be an accredited investor is probably not the best decision for you. You need to be able to leave this money alone, typically for 5 to 10 years. And if you're unable to do that, then it would be a mistake for you to go into that deal knowing that your time horizon does not really allow time for that deal to flourish. The third largest mistake is that, when you're investing as an accredited investor, you're telling the SEC that I am aware of the financial investment that I am making, and that you should also be aware that some of these deals could be extremely risky. Not properly understanding that risk before you make that investment, could be a very ill decision that an investor may be making. So you want to make sure that you have enough time to properly read the private placement memorandum documents or the operating agreement or partnership agreement. It would also be very wise for them to have an attorney or some type of legal counsel look over those documents, just to make sure that they're understanding what those documents stipulate. Because in many times, if you have an emergency, you're not able to just call up that company and take your money out like you could a mutual fund or liquidate stocks. So someone needs to properly understand that your money is going to be tied up. It may not be liquid where you can easily have access to it, but overall you're understanding the risk that you're taking when you're making those deals. One of the ways that individuals, particularly first-generational millionaires, can get started with being an accredited investor is, number one, choosing the right financial professionals to work with. These are not going to be opportunities that you can typically find with your traditional CPA, and they're definitely not opportunities that you can traditionally find with your neighborhood financial advisor. So you want to start building the best money team that's going to help you reach your goals. So, if your goal is, hey, I want to build a portfolio or a net worth of $10 million and above, then you need to start working with advisors who serve those clients, because those advisors who serve that type of clientele will have access to those types of deals. If you're just now watching this episode and you realize, wow, all these years, I never knew this was a thing. No one never told me that I was an accredited investor, that I actually met this definition 5-6 years ago. Or had I known earlier, I could have gotten there a lot quicker because I would have maneuvered differently in my business. If that's you, we would love to have a conversation with you. Reach out to us at www.empirecapitalventures.com or give us a quick call. We'll schedule an appointment. One of our team members will be happy to assist you and help you get started on your journey of being an accredited investor.
The Combo, your home for conversations on Black entrepreneurship and wealth, available on your favorite platforms.